Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a look at the action in today's session and a step back and a look at how the week went down. And we'll also give you our thoughts on what to do for the week ahead. So, Ed, we didn't finish the week on quite a strong note, but perhaps some constructive action, and we'll talk about key levels too.
Yeah, we'll talk about that. I mean, it's hard to know. We retreated this week, but is this a constructive pause forming handles, or is this the beginning of us falling back to lows? It really is too soon to tell. But we do want to take a look at a few stocks. Northrop Grumman, Albemarle, and Dollar Tree is looking actually fairly interesting.
All right, we'll check in on those, but first, let's take a look at those major indexes. So today, the NASDAQ closing down almost 2.5%, just shy of that mark. We have the S&P 500 down 1.6%, the Dow down a little over 1%, and the Russell 2000 also down 1%. So not what we wanted to see after, a couple of tests of support at the 21-day line and a pretty positive looking Thursday, but some weakness coming into the market here. We did close above 12,000 though, and that 21-day line.
Yeah, so that's a positive. I mean, after some big gains in the prior week, we followed through on the NASDAQ. It's not that much of a surprise to pull back. It doesn't, it's not much of a pullback when you look at how we moved from the prior week. So it's down. Now it's just a question now what happens next. I mean, sideways action, some more of that would be fine because then you have more handles develop, maybe some bases form. So that would be fine. But the real question, okay, if we move higher, that would be positive, though we have plenty of resistance levels coming up, and we have to keep that in mind. I mean, it's sort of like a handle low and a base. One reason why we don't consider those proper is because there's all this overhead resistance. And if the NASDAQ gets above this week's high, then it goes right to the 50-day line, and then it has the 200-day line along with, say, the late March highs. I mean, just there's a lot of levels where people might say, I'm going to get out, and things reverse lower. There were a bunch of, like in the 2000, 2002 bear market, there was plenty of strong rallies in there, so we don't know what we've got right now. And so investors have to keep that in mind. How long will this go? And, it's okay right now, but definitely bears watching.
Yes, and a bit of an uphill battle. So caution still warranted at this time. And let's also take a look at the S&P 500 as well, holding above its 21-day line. Like the NASDAQ, starting to form a bit of a trading range here. We also have the Dow to look at, which was starting to get kind of close to its 50-day line. It's backed off a little bit. We can also take a look at IWM, the ETF that tracks the Russell 2000. It too getting pretty close to that 50-day line, a potential resistance level. And as we've talked about before, whereas the NASDAQ in later in May did undercut its earlier lows, the Russell 2000 did not. So perhaps a little bit of short-term relative outperformance there, Ed. And let's also take a look at the 10-year Treasury yield, DRTNX on MarketSmith, because that was one of the interesting stories this week.
Yeah, there was a lot of Fed officials who basically came out and said, we're going to get a bunch of rate hikes. I mean, there had been some hints that maybe we'd get a pause after the June and July meetings, but it's pretty clear we're going to at least see another hike, probably a big hike in September. That was really trying to bake that in. Also, we had the jobs report today, and we had other strong labor market data this week. You can see how the Treasury yields really rose sharply, and that sort of weighed on the market. And you notice that the market had a big pop on Thursday. Well, the bond yield dropped a little bit. It's not a one-to-one. I mean, the market can rise sometimes and go back and forth, but that's clearly been a headwind. A rising Treasury yield has been a headwind. The Fed clearly wants to see a slower economy. There's a lot of reasons to say it's a difficult scenario for the market to make a lot of headway right now.
Right. And while we are trying to keep much of our powder dry, some test buys here and there, I guess even though rising rates is bad for the market, well, investors who are paying attention to this and tracking it every day like we are can actually get exposure and get involved with trades that are mirroring this action with ETFs.
Yeah, and that's worked out well for, I think, for you and for IVD. I have not done it. I wish I had, but yeah, it bounced like TBT, but this bounced right off the 50-day line. I think TBT did very well. Came close to that. Probably came to the 10-week line. So there's definitely
Hmm.
been some, nice action here for those who are playing it. It's just like you don't want to be, stay in a particular mindset. Say I'm only in growth stocks. I'm always going to be bullish. You have to be flexible. This has definitely been an area. I mean, betting on bond yields has been a pretty strong bet for the past several months.
All right. Well, we'll have to see where it goes from here, but interesting development this week. All right. Well, let's take a look at a couple of stocks. A second chance for NOC. It's a second time charm here, Ed. It presented an entry on the 24th with a declining tops trend line. And if you were a short-term trader, you may have gotten shaken out just a couple of days later. It did come down to the 50-day line, but found support there, reversing higher and following up on that reversal today and edging above a buy point. So clearing all of this area going back to early April, whereas the previous entry was just clearing shorter term resistance. But now the stock is vying for its highest levels in quite a while here.
Yeah, and it looks like an all-time closing high today. So it's really getting above the bulk of that, or it's certainly a long-term high. So it's positive action. Now the volume was okay today. I mean, it was lighter than the prior days, though the prior days also involved a lot of some upside reversals within those declines. So it's hard to say how negative those down days were.
Right.
Um,
Closed well off lows, both of those
well
days.
off the lows. You could have bought maybe early today as it sort of broke the downtrend. It sort of formed a handle within this handle. You could almost, that was a pretty big handle. The handle is longer than the cup, which is a little odd. I mean, who has a cup like that? I mean, but if you treat that, you could almost treat it as a separate base, in which case this would have been, a handle right there. So you could have bought it maybe a little early trying to do that, but this is perfectly fine. Unlike some stocks that we've been looking at, this is not that far from the 50-day line even now. So that's comforting because, this has come back and tested the 50-day line. So that would be an area where you might hope to have it find support again if it pulled back.
Right, and stocks can be tricky like that. They can break out, pull back, shake you out. But going into a trade, having your time frame and your rules predefined, because if your edge is with shorter term trading, but then you see something like this and think, oh well, I should have held. Well, there are other times when it's not gonna pan out like this. It could have continued to fall. So making sure that you have that mental toughness and flexibility at the same time,
Yeah.
is something that I think is important.
I think it's important because, look, we have a shakeout and things, but you don't know. Yeah, as you're saying, you don't know. There's a reason why handles shake people out, because sometimes they don't turn into handles; they just fall apart. I mean, and so you just don't know, and so you have to follow those. Yeah, follow those rules. The rules aren't going to guarantee you win every time. The rules are going to keep you safe and help you get your odds higher.
Exactly. All right. Thank you, Ed. And next on our list, a Dollar Tree. The saga continues. Now we have a cup base showing up on pattern recognition. This is a stock that got hit pretty hard with between Walmart and Target. That really wrecked a lot of retail related names. But this one quickly found its footing, and not only did it find support at the 200-day line, but then its quarterly report sent it right back up to where it was trading before it got hit by the Target news, and it's been tightening up ever since.
Yeah, so I mean, I know it's crazy, but this is sort of like almost as this lost and just sort of almost forgot about it, put your thumb on it, because the fears were that the earnings were going to be terrible because of what Target did. Well, they weren't. They weren't. I mean, so you can almost ignore that. You can't, but you can. I mean, it's sort of what's nice is
exit out, right?
Sort of exit out. I mean, and you wanted to see some tighter action. So I mean, because if there hadn't been that action, you might have thought when it first came above the 50-day line on that earnings that would have been a buy point. But but probably you wanted to see some tightening up. Okay, so now It's tightened up. It pulled back a little bit this week, but it's above the 50-day line. In one more day, this will have a handle on a daily chart. But if you go to a weekly chart, and it won't quite show it yet because it'll take like an hour or two, but in an hour or two, this should show a handle because it is a down week. So that will be a cup with handle base, and last week's high will be the top, 10 cents above that will be a buy point. So, this is one holding up well. While we're worried about discretionary spending, people are probably still appear to be spending at these specialty stores with real staples and, bargain basement prices. That spending is still continuing.
And Ed, like you said about Northrop, I don't know what cup has a handle like that. Well, I don't know what cup has the kind of shape that this one has either. So we're taking a look at some oddly shaped base structures here today.
Yeah, bad markets do not necessarily have the prettiest bases that come out of that.
There you go. All right, and last on our list, let's check back in on Albemarle. I know the lithium space is one that you've been following closely, and when this stock did clear that 248, 249 level, I think many of us were hoping for it to tighten up because the base on the right side had been so wild, and we got more wild action this weekend.
We did get more wild action. I mean, it would have been hard, especially if you bought it and close to the high of this recent run. There was really sharp selling. I mean, you were way down below 7-8%. Yes, it did find support a couple of days ago around the 21-day line, and it has rebounded, and now it's back above that early entries. But that is really wild. I mean, there's no doubt about it. And it is odd. The thing is, it doesn't look as bad on a weekly chart. In fact, on a weekly chart, this is another stock that will have a handle now. So it doesn't look that wild from that perspective. The volume it's too bad the volume didn't dry up a little bit more. I mean, so that was disappointing. If you look on a monthly, that's something else because it had such a strong May that it looks like here, it's like, that doesn't look, I mean, it was like, well, of course it had to pull back some, right? I mean, it raised guidance twice last month, so it had this enormous gain. I think it was the best performer in the S&P 500 last month. So there is that perspective. You would like to see it calm down, but I mean, I'm just pointing this one out. It's a hot area story, but at the same time, I think that people who bought it, certainly on that last Friday, would have had to have gotten out because it was just too high of a loss. It doesn't mean that you can't buy it later. Maybe it tightens up. It would be great if it had a few weeks of sideways action because it's still well above the 200-day line, the 50-day line, which is still below the 200-day. So there's a lot of action there. I mean, it'd be nice to see a lot of sideways action because that's a problem with some of these setups is that because they move so much in the last few weeks, the moving averages still have to catch up.
Right. And I think, the entry on Thursday when it did initially start to clear this big area of resistance that we talked about goes all the way back to the prior base, roughly, that going with a smaller position due to not only just the volatile nature of the stock, but also just where we're at in the market, and maybe going with a smaller position could have given you a little bit of that wiggle room to maybe trim when it came in so hard and see if it found support at the 21-day line. But otherwise, like you said, Ed, if you were buying that Friday, this one would have been really tough to hold if you were following the rules.
Yeah, and it's just, look, this kind of market is just difficult. When the market is really in an uptrend, I mean, these things don't necessarily happen, or they happen after it's run up 30%, and then it falls back 7 or 8%. It's like, oh, fine. It's like, it's just a tougher market to get any gains, and the gains can be short term. So you just have to, keeping positions small, being very nimble. I mean, this is a difficult market, even though we are still in a confirmed uptrend.
All right. And now let's talk a little bit about what we could expect for the week ahead, Ed. Was this week constructive or ominous? What do you think?
As I said before, we really have to see going forward because it's like this could be a pause and we just move right up. This is a week that's one of those weeks that I don't think you can take a whole lot away from it by itself. I mean, the prior week, okay, we had a confirmed uptrend. We broke some things. I mean, there was a character change, at least in the short run. But this week, it's like we held levels, we fell. There was some positive action in stocks. There was some negative action. So I don't think it's maybe as an investor you added a little, maybe you reduced a little based on your positions, based on when you bought exactly. But your exposure should probably still be pretty light, and it shouldn't be. Wait for more of that decisive moves. When we get it really strong. If we have a multi-month uptrend, there will be big opportunities, and maybe we're at the start of it, but we don't know that really yet.
Yeah, that's right. Well said, Ed. And thank you all for tuning in. And Ed, thanks for your insights today. We will be back with more next week. So make sure you tune into IEBD Live in the mornings, investors.com/IEBD Live for the first 90 minutes of the trading day. We are there analyzing stocks in real time, market action, talking about our trading strategies that we use, and getting into all the details on the technical action and talking about trends that we're seeing in industry groups as well. So we'll see you there on IEBD Live. And then coming up on Tuesday, we have our leaderboard scorecard webinar talking about May performance. So we'll see you there. If you're a leaderboard subscriber or trialist, you will see a link at the top banner at leaderboard.investors.com. Thanks for joining us once again. We hope you have a great weekend, everyone, and we'll see you next week.